It's time for business. Let's turn to Kate Moody and that other story we're all watching, which is those down to the wire Brexit negotiations. Earlier, we had this olive branch with the UK saying it's not going to go rogue when it comes to respecting the Irish border. How have the markets reacted to that, Kate?
Well, Francois, there's still a fair amount of pessimism on the markets ahead of that crucial face-to-face meeting that we're expecting between Boris Johnson and Ursula von der Leyen in the coming days. The pound is still trading lower against both the dollar and the euro. Not quite such a stark drop today as we did see on Monday. It's trading just above $1.33 and about €1.10. It had risen slightly against both those currencies earlier in the day after the UK did agree to withdraw the more controversial elements of that new Brexit law. Currency analysts do expect significant volatility in the days to come, and they say the pound could really plunge if we see talks collapsing. We saw a flat close for the major European stock markets. The CAC 40 dropped about 0.25%. Stocks in London and Frankfurt closed ever so slightly above the flat line there. Investors are watching those talks in Brussels, but they're also going to be turning their attention to the European Central Bank, which is expected to announce more emergency support for the Eurozone economy at its meeting this Thursday. Wall Street's trending slightly higher, and U.S. investors perhaps surprisingly not reacting more positively to that news that the U.S. Federal Food and Drug Administration has given a preliminary report saying it doesn't see any problems with the Pfizer coronavirus vaccine. We're expecting full approval of that vaccine possibly to come by the end of this week. Pfizer shares, though, are up about 3.5% in New York. And Tesla shares have dropped around 2% after the electric car maker said it would be selling about $5 billion worth of additional stock. Tesla is set to start trading on the S&P 500 later this month.
Kate, we're 1 week away from the EU unveiling its Digital Services Act, and you were mentioning, the terms under which the UK and the rest of the continent go their separate ways. What's the UK doing about its digital strategy?
Well, they're creating their own unit because, of course, as of January 1st, the European Commission rules on things like competition and data privacy will no longer apply in the United Kingdom. Now, the British Competition and Markets Authority has said this Tuesday that it's going to be setting up its own digital markets unit to monitor and regulate those sorts of issues. And it's planning a pretty different approach than the one that we've seen in Brussels. Tech giants like Facebook, Google, and Apple will be issued customized sets of rules depending on their business model. If they breach those rules, they could face fines of up to 10% of global turnover. That could be billions of euros. This is all according to the CMA, which has released these details earlier today. Now, the goal, according to British regulators, is going to be to proactively shape the behavior of the world's most powerful tech firms. As we know, this is something that governments around the world are really struggling to contend with. The EU has attacked this issue with relish. Margaret Vestager has for years been trying to weaken these tech giants' holds on their respective markets and on data to only limited effect. Whether the UK, of course, will fare any better as a separate entity is for now unclear.
And Australia has come up with a novel solution for taking on Silicon Valley.
Yeah, this is actually one of the strongest concrete efforts to rein in these tech giants, and notably Google and Facebook are being targeted here. The Australian Parliament is preparing to take up legislation that would force online platforms to negotiate fees with local media companies before displaying their stories. The values could be linked to how many clicks a certain story receives when it's pulled up on either Facebook or Google. More than half of Australians access all their news through one of those two platforms, and the two companies amount for a whopping 4/5 of all Australian online advertising spending. They argue that they actually give more visibility to those news providers. The government, though, says the model really needs to change.
Kate Moody, many thanks. We'll have more business news for you coming up later. It's time.